Crypto is all about buying low and selling high. Unfortunately, most people research a cryptocurrency only when it's already risen. Now, Popcat, interestingly enough, underperformed in the last month to a suspicious degree. Within Solana, within the meme coins on Solana, Popcat performed very poorly. Is this an opportunity to potentially buy? Let's have a look at the on-chain data, the data most people are not considering. So this is what I mean. We're currently at 30 cents and Popcat went down by almost 11% in the last month. However, other major meme coins on the Solana blockchain performed very, very well. Popcat is standing out. There's not a lot of attention on the token right now, and there is correlation between attention and price. When attention is low, the price tends to be low. When attention rises, the price tends to appreciate. Popcat isn't even among the trending tokens on the Solana chain, despite its size, because there's almost 10 million worth of liquidity on chain, but there were only 225 wallets that interacted with the token in the last 24 hours. In total, we've got 144,000 holders on chain, but not all of those holders are created equal, right? Some of them might just be arbitrage bots that hold a few cents worth of the token, while other holders might hold hundreds of thousands of dollars worth of the token. So we have to look into the details. What we're seeing on the left is the number of new users per day for Popcat, and it tends to rather go down. At least it's clearly not growing. The same is true for the number of token transactions per day. What we're seeing here is the trading volume over time. Now, this is not just the last month, but this is since creation of the token. It's in US dollars on the left, and it's normalized to 100% on the right. So you can look at the segregation. Is it rather the small wallets that trade the token, or is it the larger wallets? Now, on the left side, we can clearly see again that attention of Popcat is currently very low. It doesn't get traded that much in the last days. We do see though, however, that most of the trading happens by the small retail investor. So it's not the whales anymore that push the price around. We might be at some kind of a balance, at some kind of an equilibrium. Now here is the potential bad news. What we see over here is the number of retail investors versus whale investors over time. So instead of looking at all of the wallets that ever held Popcat, we're looking at the wallets that have at least a certain minimum threshold in the number of tokens. So to be counted for the chart on the left, a wallet has to hold at least 3,000 Popcat tokens. So at the current price, that's roughly $900 worth of the token. For the chart in the middle, we go at 10x in minimum holding. So that's now $9,000 worth of the token. On the right, another 10x, so that's $100,000 worth of the token. We can see how the accumulation has stopped at the end of 2024. We can also see how the whales continuously sell. However, since February of this year, there seems to have, at least for the whales, turned around. And again, the wallets here on the right are 100 times more important than the wallets on the left. So those 330 whale wallets, that's worth 33,000 retail wallets. And there aren't that many retail wallets, right? There's only 9,000 such wallets. So really, the whales dictate where the price is going. February of this year was also the time when Popcat relative to Solana bottomed. So no surprise here, right? The whales stopped selling and the price of Popcat bottomed. Now, it didn't just bottom. It even appreciated. It went up by 90%. But the number of whale wallets definitely did not rise by 90%. So something else must be responsible for the increase in price. It can't just be accumulation by the whales. Is it maybe a general uptick in interest? Let's have a look at the YouTube numbers. So I've published 4 videos on Popcat so far. The very first video underperformed the average video on this channel. So the average video is here, this line in gray, and the specific Popcat video is the blue line. The most recent video on Popcat again underperformed. By the way, the first video was published when the price was still at 3 cents. Now we are 10x from that. But it was actually way more extreme. At some point, Popcat went up by almost 8,000% since that very first video. To then, of course, see this massive crash of 93%. But still, from that point to today, it's a 10x. So it's all about being early in crypto. And I try to publish videos on cryptocurrencies that still do have some upside potential. So feel free to subscribe over here. But again, we haven't yet answered the question. When the trading volume is so low, and when the number of whales didn't really grow that much, how was it possible to see a 90% price increase relative to Solana since February of this year? I think the answer is in short-term leverage. Recently, we do see a lot of introduction of perpetual futures short-term leverage that pushes around the price of various altcoins. Popcat included. In the last 24 hours, we only saw 8 million worth of trading volume on the spot market. And that was on MaxC. On the perpetual futures market, however, we saw 74 million worth of trading volume. So it's really the bets on the price that currently move the asset. It's not the spot market anymore. Most of perpetual futures traders bet on rising prices. That's why the funding rate is positive. So the longs have to pay the shorts in order to bet on rising prices. And whenever the price goes up quickly, that's when the shorts get liquidated. But the main point is that the open interest over time since February of this year increased. And because of that open interest, that's mainly long, we see upward pressure on the price. The open interest went from roughly 100 million to 150 million. And there is some correlation between the spot price and the open interest. If the open interest goes down, Popcat is likely going to underperform Solana. And if speculation increases again, it will outperform. Really, the long-term holders aren't interested in the asset anymore. Attention is constantly going down. The current holders are selling off. But the short-term leverage money does play around with the asset every now and then. And that causes the price rallies. So whenever there's a spike in price, it might make sense to take some profit. Whenever we crash very quickly because of long liquidations, it might make sense to buy the bottom. So short-term scalping is the name of the game for Popcat. It's not anymore long-term holding. Now, within crypto, the decentralized finance sector looks quite interesting because across all blockchains, we are not yet at all-time highs in terms of total value locked, in terms of capital that's floating around. Asset prices in decentralized finance were way higher at the end of 2021. Then we had the Terra Luna collapse and the subsequent bear market, and now since October of 2023, the recovery. But we are still quite far away from the all-time high. Yet when we look at the number of stable coins that are now floating around, that is at an all-time high. In other words, there seems to be less inherent leverage in the system. So I do not expect a major protocol blowing up tomorrow. But it is important to watch both metrics, the TVL in DeFi, but also whether or not money is flowing into the space, right? This is what stablecoins are all about. So we are a little bit in no man's land here, right? It's a bit of a gray zone. We are not extremely cheap historically, but we aren't that heated either that everything is going to blow up tomorrow. The way how I navigate this is using the very badly performing altcoins. And I am not buying the altcoins. I'm doing the exact opposite. What we see here are the smaller altcoins with their performance in the last year. And just have a look at this, right? Bitcoin in the last year went up, but all of those altcoins, not all, but most of them went down. And so I'm betting on falling altcoin prices. I'm also hedging that versus the general macro. As in, if now Bitcoin and Solana and Ethereum was to suddenly go up, then my short positions in the altcoins wouldn't be affected by this because the relative performance of those bad altcoins to those major players matters. What we're seeing over here is my perpetual futures account with the current positions that I've opened together with the hedges. So it's expected that the hedges go in the opposite direction to the altcoin shorts. I've started the account with 40K 2 months ago. Now there's been more than 25% return already. I forgot to set a proper stop loss over here. That's why this went down more than I wanted to. Without that massive drop, the line would look much nicer and it would have been even more return. But 10%, more than 10% per month is more than enough for me. And so this is then how that works, right? We're just betting on poorly performing altcoins to continue to do bad. And this underperformance happens very constantly with very little volatility. And we can just flip this chart around, right? When we bet on falling prices, then it looks like this. Would you buy an asset like this? Would you buy something that continuously appreciates? Now this is a linear scale. On a logarithmic scale, it looks like this. Still, right? Very constant long-term growth under comparatively little volatility. So the chart isn't going up and down erratically that much. And I think this is really where the alpha, where the outperformance in crypto lies. It's not about finding the 1 or 2 altcoins that do a bit better. It's about exploiting the market structure. Now, why do we see so much red over here? Why do we see so many altcoins underperform that consistently? The answer is token unlocks. It's new tokens that hit the market and the demand not catching up to that growing supply. So this supply schedule here belongs to this asset. Every single week, there are hundreds of millions of dollars of unlocks in crypto. If money doesn't flow into the space at that rate, we see this kind of performance long term. Here are the tokens with most issuance in the next month. So for example here, right, WorldCoin is a token with a ton of additional supply hitting the market. And I shorted WorldCoin on May 23rd when we had a short squeeze and a very nice potential entry opportunity. So I shared that trade in the premium membership, that's thebitcoinstrategy.com. And then just a few days later, I closed the position. And yeah, if you've got proper risk management in place, you can make very nice returns. The community, of course, copy traded that as well. And so members got similar kinds of returns. But really, fundamentally, premium is not just about copy trading whatever I do. It's more about learning. It's more about exchanging information with the rest of the community and leveling up together. We want to take advantage of the market structure. We don't just want to blindly copy trade others. And so there are plenty of trades that I did not do, but that the community still benefited from. Crypto is a game of both luck, but also of skill. And the more we play the game, the less important the luck component becomes, and the more important the edge, the skill becomes. It's pretty much like in a casino, right? The casino does not know the outcome of a single game, but when the odds are in our favor, if we play often enough, we win. I mean, from the perspective of the casino, of course. And so I've published several tutorial videos on how to set this all up. How do we bet on relative evaluations, and how do we do this on Hyperliquid, which is the leading platform for perpetual futures in decentralized finance right now. And here, this video is probably even more important. How do we do proper risk management with that? Because while those trades look impressive, it's all about the long term. Most trades make money when we follow that strategy, but some don't. And we don't want to blow our entire portfolio just because of a single short squeeze. So yeah, feel free to check it out. It's currently $125 per month. If you've got a larger portfolio and you want to get feedback directly from me, you want to have a one-on-one session, you can also sign up for the yearly membership. For the yearly membership, you do get $250 off, so it's cheaper per month, but also there's a 1-hour Zoom call included. So I simply want to welcome everybody that makes a longer term commitment. And of course, we can talk also about other asset classes, not just crypto, how we are properly diversified across stocks, precious metals, property, etc. A link to premium should pop up directly over here. Just click on that link. It will lead you to the website. If it's the very first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube, or see you in premium. Cheers.